Hope everyone's week is off to a pleasant start. Had a little bit of a retrace yesterday, although it wasn't too bad into the close, but we're starting to retrace again overnight here. Some market that's very, very overbought. And if we look at some of the measures of that, and maybe I'll pull that up a little bit later during the stream, but it's definitely a market that's extended. And so it's not too surprised to see a little bit of retrace happening here to correct that. Some consolidation doesn't necessarily mean the market has to go right back to its lows. It just means we have a higher risk of a corrective impulse here. So let's dig in. Let's have some fun. If you have questions, by the way, I will be getting to them as we go throughout the show. So let's dive in. First, just a quick disclosure. Be careful out there. Don't risk more money than you're willing to lose. That's the basic tenet of the market. For me, it means I try on swing trades, especially, not to lose more than 1 to 2% of my total portfolio on a single trade. So that way I always have the capital to come back for another trade. And if you run your trading like, a business, which is how we should be running our trading, then it means we're buying and selling inventory, hoping to capture a spread, building consistency, and treating this like a business, which means we have to remain capitalized. So that's the big heads up on risk. Don't treat it like a game. Don't treat it like a casino. Treat it like a business if you want to have staying power. And the folks at Bookmap would love for you to join their Discord. They've got a lot of great educational materials and activities and a really friendly crew of folks to help you learn more about the program. They also have a cool class that they've just released about supply and demand setup, so you can check out for free on the Bookmap Learning Center. And a bit about me, I've been trading for over 20 years now. It's been an amazing journey. There's been wild ups and downs, including the great financial crisis. That was probably the most insane time because here I was only a couple of years into my journey, and I was waking up in 2008 and firing up my systems and looking at like a bidless Microsoft or a bidless Exxon or a Dow down 600, and then suddenly there's a 50 basis point Fed emergency rate cut, and now it's up 600 points in a matter of minutes. And back then the Dow was trading around 6, 7, 8,000. So that was a big deal. Those numbers that seem so small now. So what that all taught me was to be mindful of what convictions you're holding, why you're holding them, and how you're navigating through these markets, because at any moment, you can have something that changes the entire narrative and the market regime. So it also was an exercise in checking my ego at the door, focusing on the market in front of me, and being open to the possibilities that the order flow would suggest could come true. So throughout the years, I started off as a more discretionary trader, more driven off of gut feel. And I've evolved to be much more systematic. That doesn't mean I don't have any gut feel or I don't involve my gut at all in my trading, but it does mean that I'm much, much, much more careful about that gut feel versus the systematic data that I use to feed where I'm getting my trade ideas from, how I'm managing my risk, how I'm measuring volatility. Every time I get into a trade, I have to know, where's my exit? What's my risk? What's my reward, potentially? And then that allows me to determine what my stop is going to look like. By knowing how far out of my position I'm willing to take a stop, that determines my position size, because I don't want to lose more than 1 to 2% of total portfolio liquidity on a trade. So it's all systematic in terms of how I approach the trades, how I navigate them, how I execute my entry and exit. And I journal all of this. Even though I've been trading for 2 decades, I still journal my trades. Why do I journal my trades? Because there's always room for improvement. No matter how long or short you've been at this game, the best thing you can do for yourself is to have a running history of everything you're doing. And I don't mean going into your broker and looking at your trade history, because that's going to omit some important details. When I'm journaling my trades, I'm including factors like what's my setup, what's my thesis, what's my risk, what's my reward, And also, what's my state of mind? You know, you can find a little bit more about your own trading psychology by examining these variables. And there's no 100% right way to journal. Everyone's got a little bit of a nuance into how they may feel best doing it and what may add the most value to them looking back on it. But what journaling does do, if you actually go back and read your journal, is it makes you accountable. You have to look at those bad trades and say, gee, why did I take that? What was happening in my mind that had me take that bad trade, and how can I avoid that outcome again, or at least get ahead of it? Same with the good trades. We need to determine why they're working. That way we can build consistency, right? If we don't understand why our good trades are working, then we're not going to be able to build a repeatable system in place to be able to make that something that we can, rely on. We're not going to have a 100% win rate. But even anything over 50%, if your wins are sizable and you're cutting your losers early, is going to deliver you very nice returns over time. So it's all about managing that process. Creating one if you don't have one already. Trading should never feel like a gamble. If it does, you're doing it wrong. If you go to bed at night and you can't sleep because you're thinking about your portfolio and all the risk you have on, you're too deep. You have too much leverage or too much exposure for your comfort level, right? You need to be able to think clearly throughout this process. Whether it's a market that's up 1,000 points, down 1,000 points, sideways, whatever's going on, you need to be in a state of mind where you can very quickly make accurate decisions that aren't just based on your gut feel or your emotions. And that's why having a system to balance out your risk, your reward, your position size, your stop placement can help a lot with that process. So let's move on, talk a little bit about why I watch order flow. And give me one moment here. All right, awesome. So I like to watch order flow because it gives me a sense as to which components are moving the market. You have a lot of different inputs for market price discovery. Let's talk about the S&P 500, for example. The biggest input is options. Options have an enormous impact on price discovery in the S&P 500 because the index options trade about 1.2 trillion of notional every day. So that's your big catalyst, SPX options. But we still have to watch SPY options, the futures contracts for the S&P 500, the SPY ETF, because there's also flow in and out of those units outside of what the options suggest, and then some of the largest shares, some of the biggest companies out there. Really at this point, your sort of magnificent 10, your 10 largest S&P components are such a big part of the index, you kind of have to have a sense as to what they're doing too. So that helps you to kind of get a sense as to what market sentiment may be. How are the options trading? Is there more demand for calls than puts as a very easy two-dimensional sentiment gauge? Is that call demand on the right side of the market? Let's say the market is trending higher. Then that means that call demand being in excess of puts is giving you a sense that there is room for that price to continue moving higher to that call strike. On the other side of it, if you have a market that's trending lower and you see a lot of call buying overhead, you still need to look for that area for the market to bottom and reverse. And we've seen this play out time and time again. You get this early flow, it's very strong, it's looking for upside, but you don't necessarily get the the follow through right away. And folks will say, "Oh, the flow's not working. It's you see the price is going down even though calls are getting more and more demand." And what I have to say to that is patience. We have a 6.5 hour trading day. There's a lot of things that can happen. Obviously, there will be some days where, say, options flow doesn't necessarily lead the market, but those are edge cases. Those are outliers. By and large, options flow, particularly in SPX, leads the market. So I like watching that flow. I think that's one of the most important elements. And I've got some new tools I'm working on to better expand on how we can watch that options flow. I also think it's important to watch deltas. Deltas are, it's just a fancy Greek word for differential, okay? When we're looking at deltas in Bookmap, we're looking at deltas in transactional activity. So the bubbles that you can kind of see in the background here, and we'll talk about it more when we have the heat map on screen, those are delta bubbles. Those are showing you which side is more aggressive at any particular moment in time. There's also delta candlesticks. They show you the volume and who the aggressor is at any moment. And then there's the session volume profile, which takes out that element of granularity of time and looks instead at the entire session and who are or where there is aggressive at certain price points. The who maybe being the buyer or the seller at certain price points, right? So you put that all together, you have a better sense as to where there's aggression at certain price levels. And this comes into play when making trading decisions. And we'll talk about that in the heat map, but you can imagine if you have a large desk that opens a big buy order, you see it in the bubbles, you see it in the volume candles, you see it in the session volume profile, and then we get well below that. Well, they're likely to have to be more motivated to sell to cover that position, to basically manage that risk, to flatten out. And the same thing is true if someone gets aggressively short. And you see that in the bubbles, you see that in the session volume profile, maybe you see it in the iceberg prints as well, and then price starts to move much higher. They're more likely to become a motivated buyer, to flatten out, to cover that position. So watching these deltas can give you a sense as to where there's aggression, but also when certain participants may get offsides and sort of flip the script. They may have started off as a buyer, but inevitably they become a motivated seller when price gets too far away from them. I also like to look for large passive order flow, icebergs, and Bookmap has this available via their MBO data package for Rhythmic and for their own namesake Bookmap data. These icebergs are available for futures contracts. They help you identify where there's large amounts of passive buying and selling. I've tuned up my iceberg, so I use a 10 standard deviation over a 90-minute time frame. That shows me only the most aggressive icebergs, the ones that are going to stand out in the tape. That's what catches my attention. I even have alerts set up, audio alerts for the largest of those. So if I get an iceberg that's thousands of lots on the S&P 500, Bookmap is going to be whispering in my ear with its robotic text-to-speech voice saying that there's been this really large order. And that tells me, boy, I should probably take a look. Because one of the ways I avoid mental fatigue in trading is I'm not constantly staring at charts. I have different alerts set up that will grab my attention and help direct me to look at the chart when there's something important going on. I tend to watch most closely the open half hour and the close half hour. So that'll be a time where I'm pretty glued to the charts because there's so much transacting going on by institutions. But for the rest of the trading day, sans the odd event volatility catalyst like the Fed or something else, I'm mostly relying off of alerts and then occasionally looking at the charts because mental capital, just like our own capital in our portfolio, it also has to be preserved. You don't want to burn yourself out staring at the screen and then a trade comes up and you miss it because you're just sort of tired, mentally fatigued. It's a big thing we don't spend enough time talking about is managing our mental capital and our time. It's so important, especially if you're going to treat this like a business. And another area I really like to watch is exhaustive trading action. So if you want to eyeball something like this, you could look for a really large stop run. And you could do what I do with the icebergs and set your stops to 10 standard deviation over a 90-minute time frame and set it up to only show stop runs. And then you're more likely to see those more exhaustive stop runs. But let's just say, for example, you're watching the S&P 500 trade. Let's say we get a nasty print. Maybe it's CPI or JOLTS or non-farm. And you get this huge stop run, maybe 1,000, 1,500 contracts stopped out on the sell side. That's usually pretty exhaustive. And almost always you'll get some kind of snapback, even if there is continuation lower. So looking for that exhaustion can be helpful. I've even created an indicator. It's exclusively on our Discord for TraderAid that identifies exhaustion in the S&P, in the NASDAQ, and some of the other instruments that we watch. But those three, if you're trying to get intraday trades in, watching your deltas, watching your icebergs, and watching for exhaustion can be three really good starting points for quick, nimble trades. Looking for reversals that tend to be more short duration, and by that in an intraday time frame, I mean something that lasts maybe 10 to 15 minutes all the way to an hour. Now let's take a look at the S&P 500 because we see some pretty chunky supply looming overhead here, and that's what has me concerned going into today's tape and really into this week. So I put a pretty extensive market prep out for Trader Aid members, but the long and short of it is this is a market that is quite overbought. It's grinding into supply. We've had the heaviest retail flows into stocks ever over the last month in April. And there's just a lot of signs that we aren't out of the woods yet. There's really nothing that's been resolved on the policy side. And there are some knock-on impacts that are going to happen to earnings, to the economy, and also add to it, the AI narrative is a lot more fragile here. There's a lot of changes happening behind the scenes that may upend some of those tailwinds. So I think we are closer to achieving the high of this leg of the market push just around here. I suspected it wouldn't get much above 5,600, 5,650. We've got a little higher than that. We're back to trading around 5,650 as of yesterday's close. And actually, there was a lot of put demand around that level as well. So let's talk about that in the context of the options that we have on the S&P 500 options chain. We could see that 5,650 demand from yesterday, just enormous flows coming in the late session. So folks are asking me, where did that come from? What happened yesterday? We were bouncing, the market was looking better, and then all of a sudden, the S&P 500 is tumbling down. And what I saw across my screen was large orders for 5,650 and below. Okay, some folks even hedging down to 5,400, 5,200, and this is likely event hedging. I don't think that there's some hedge fund out there just placing a large directional bet. I think that this is participants hedging out their long books. There could be some directional bets in there, but I think most of it is hedging. And this type of hedging tends to happen ahead of event volatility catalysts. We have a big one this week. We've got Jay Powell coming out from the Fed, probably saying we're not cutting now, and we're not going to cut anytime soon. And I don't think the market's going to like what the Fed has to say tomorrow. So I think yesterday, you saw some of these institutional desks start to hedge into that. And the reason I say that is because with the market as overbought as it is, and the event, even though it was 2 days away or a little less than 2 days away into yesterday's close, there was still every reason to start putting those hedges on. And indeed, they seem to be set into today's open to start even paying off. We're also pretty darn close to positive gamma. In fact, yesterday and even Friday, we were flirting with positive gamma territory. Now we're just narrowly back into negative gamma. It's almost neutral at this point. But the differentiation between positive and negative gamma really comes down to how dealers react to price action. So in negative gamma territory, you're more likely to see selling of rips and selling of dips and buying of rips. So selling lows, buying highs. That's a chase dynamic. And that would exacerbate volatility. On the other side of it, in positive gamma territory, you have the opposite. You have selling rips, buying dips, compressing volatility. And in this neutral gamma environment that we're essentially in, that activity is much more muted. Speaking of options, let's look at some of the key options levels for today. And I'm just going to share this on social as well, so you can find it there. Looking at a call wall at 5,800. A gamma 1 level, and this is a really large level of positioning in both puts and calls, can be kind of magnetic, and we saw that We saw that on Friday. We saw that a bit yesterday, kind of getting right back near that 5,700 level, that magnetic pull. But, when you get further away from those magnetic levels, it kind of has the opposite effect. It almost becomes a bit of a repulsion effect. You have the gamma flip level here at 56.97. These are all SPX cash index levels. The put wall at 56.50, as well as the vol trigger, and then gamma 2 at 5600. Remember, we talked about the magnetic potential of these gamma levels. This morning, we're trading just around gamma 2. So yesterday, we were flirting with gamma 1, getting kind of magnetically drawn into it. And then overnight, with that selling pressure, we're being magnetically pulled into gamma 2. That's SPX 5600. Of course, the same rule applies. If we get farther away from it, it becomes almost more of a repulsion effect, whether up or down, depending on how the price action is. And then for today's trading, I am looking at these two pivot levels. ES 5636 and NQ 19825.50. And what I'm looking at these pivot levels for is differentiating between bearish and bullish bias. These are decision points that are created by an algorithm that analyzes transactional activity in both the S&P futures and the NASDAQ. And so I look for these levels to help me decide whether I want to be going into longs or shorts. And so far this morning, it's suggesting more bearish price action ahead. And then finally, before we dive right into Bookmap, I've got some exclusive deals to share with you all. If you want to get up to 40% off of Bookmap, visit TraderAid.com/Bookmap. Scroll down to the special offers. That's TraderAid.com/Bookmap. And if you want to get up to 20% off of TraderAid, check us out. Visit our website. See what we're up to. We've got a lot of really cool stuff going on. Cutting-edge tools, an amazing community, and a lot of awesome actionable ideas and insights. You can visit us at TraderAid.com and use the code Mayhem20 for 20% off at checkout. All right, we're going to dive into Bookmap this morning. And I've got some cool stuff I'm hoping to be able to share during the session. We'll see if everything fires off the way I'm hoping for it to, but hoping to be able to show you all some new options tools that I've been building. And in fact, let's get a couple of other tickers on here. Let's get QQQ. And let's get SPY. And I'll show you all why just a little bit after the market open. But as we approach that market open, let's take a look around. Let's see what's going on. Because it's been kind of a nasty session overnight, so I think it deserves a little bit of attention here. I'm also just going to do some quick housekeeping on the sort here. All right, so we're going to zoom out on this view of the S&P 500. This is our filtered view. It's using candlesticks. And you can see overnight from the European Open, just selling pressure. Pretty significant, just down 1% from the European Open. And then as we approach the US Open, a little bit more selling pressure here. Looking at cash index levels, S&P is implied to open down 0.93%. NASDAQ implied to open down, let's take a look here. About 1.14%. So these are cash, actually now 1.29%. Things are moving quick. And Russell implied to open down about 1.09%. Dow 30 Boomer Index opening down about 0.84%. Give me 1 sec. I'm just going to pop open some news feeds here as we get ready. And we just have about A little under 5 minutes until the U.S. market open. More pressure here in the S&P. Let's zoom in a little bit here so we can see what's going on. And I'm also going to bring up a secondary view. Because I do want to show you all what I'm seeing here in Motive Wave as well. This is the S&P 500 futures viewed through Motive Wave. We'll kind of go back and forth so I can show you these different views. But this is us rejecting that Gamma 2 level we talked about. It had prior been support, as we can see, prior in the session, it had been support. Now we're seeing the S&P reject it with some momentum, and it's below this BGL, or the big green line, which is just an EMA 21 on a 5-minute time frame. It's a great way to look at your intraday momentum. And so we can see the same thing here, just putting it into the lens of Bookmap. Gamma 2 was support earlier. You could see that right here on the chart, almost bouncing right off that level, and now we're rejecting below it and building acceptance below it. So that just gives you a little bit of a feel that it is likely we could get some continuation selling in that first hour. And folks, if you have any questions, let me know. I think it's going to be a pretty interesting trading day. And thanks for all the love out there, folks. I see the hearts going out on the chat. That's very kind. And if you like the stream, give it a like, share it around, put it on social and otherwise. Always helps to get some more folks, some more eyeballs in there, seeing what's going on. But yeah, I mean, the basic, if you tuned in late, my basic thought here is we're overbought. We're due for some pullback. I am not sure that we're out of the woods for all the volatility that we've seen through March, April. I think there's more turbulence ahead. And I think we can see that looking at these charts and looking at these flows, that we've gotten a little bit ahead of ourselves. We haven't really resolved the structural issues at play with global trade. You've got the AI narrative being upended to some degree. There's a lot of things that are changing underneath the surface that suggest a risk re-rating lower could be ahead of us. Let's take a look at some of these leadership stocks just as we get close to the market open. We've got Apple here just popping a little bit, but before the market opens here, this stock is down a bit. It's down about 1/3%. AMD, we've got earnings tonight. I likely will be covering those earnings for AMD. So that'll be coming out after the bell. I think AMD is a company with strong turnaround potential and terrible management. Sad to see it. I really like a lot of what they're doing, but I hate their M&A. And I think Lisa Su needs to stop buying other companies, particularly at their cyclical innovation peaks. She did this with AI prior. She did it with high performance computing. I just want them to focus on their core competencies. Just focus on the AMD that can really compete with Intel and NVIDIA and not go out in 5 million different directions and dilute themselves. This is a big problem with tech companies. They try to go in too many directions at the same time. I feel like Microsoft is suffering from some of that fatigue lately as well. But that's been a big problem with AMD, just buying and buying and buying and buying different companies. So the stock is down a bit ahead of earnings today. The market's opening now, so we're going to get to the market and then go back to some of these stocks in just a moment. S&P coming off its lows, a little bit of a buy stop run to the upside. And these stops, these are the ones I was telling you about where it is based on a 10 standard deviation. So if you want to set this up on your end, you can do so. You can mirror my settings pretty easily. So you use a 90-minute standard deviation interval, a 10 standard deviation multiplier, and show only stop runs, and then color code your stops. That's it. It's that easy. And then you can clean up any of that exogenous stop data. And the same logic applies to the icebergs. Color coding, 90-minute time frame, 10 standard deviation. You can see there's a passive sell up here, 807 contracts. Kind of chunky. Not huge, but kind of chunky. Worth watching. Rainy days, I have my own gamma calculation algorithm, and it varies from what they look at. It's a little bit more, I would say it's a little bit more nuanced to more short dated focused. And so, yeah, this isn't spot gamma data. This is my data, my algorithm, and it tends to hit pretty darn well. So this is data from the SPX options visualizer. It goes through CBOE data for about 10,000 strikes on the options chain, and it actually updates the data throughout the trading day. It's not a one and done, once a night type of thing. It's updating throughout the trading day as positioning may change, as you see the gamma exposure change, as you see positions built and subtracted. We do a little bit of inference based on the flow and premium. So it's actually a little bit ahead of a lot of what's out there right now. You can learn more by visiting traderaid.com/SPX. And that visualizer is about to be available for just about every optionable stock and index and ETF out there. So we do see a nice little pop to the point of control playing out with S&P 500 futures. That point of control is calculated from the session start, Globex start at 6 p.m. Eastern. So that is a natural area to see some potential resistance overhead. And we are seeing just a bit of a push above that point of control. So strong open so far, not a huge amount of volume, but some aggression by the buyers. We talked about watching deltas before. We could see that opening bubble there, that one that happened right after the 9:30 open. There is a decent amount of aggressive buying in there. We can also see that in the delta candles below. We can also see it help to build out some of this session volume profile positivity there, right at that same level. So pushing over our SPX options visualizer gamma 2 level, that was an area of resistance overnight. It had prior been support. If we zoom out, we can see that again. That's constructive, as is pushing above the point of control here. And we can see on the session volume profile all of those seller deltas. The further we push higher here, the more these, which some of this session volume profile sell delta is likely shorts, the more that these shorts would get offsides and become motivated buyers. And also, you would see more stop runs. We just saw another 168 contracts get stopped out, likely some of those same shorts from earlier. All right, let's take a look here. I'm going to see. I think once we get some more flow in, I'll be able to map out the options visualizer for some of these other stocks as well. So we'll give it about another 10, 15. But that, hopefully, if everything works on the back end with some of the new engine updates I've made, that'll allow us to update the visualizer for just about everything. ETFs, indices, stocks, etc., displayable on Bookmap in the Cloud Notes column from my feed. So some exciting innovations happening here. And by the way, let's just switch back to the motive wave chart here. Look at this insane outside candle. I color my outside candles blue just because it's usually good to pay attention to outside candles when they happen. This is a pretty violent 5-minute candle right off the open. To see something like that, it also suggests that maybe some of this is going to be retraced just because a push of that magnitude right off the open on not much volume, doesn't look super sturdy. And let's also make sure we're watching this outside liquidity. You can simply enable the plugin on your end if you want to do so. The outside liquidity on the S&P 500 futures contract today is pretty low. 26,000 across bids and offers. I like to see this around 50 to 60,000. So to me, this is really weak in terms of liquidity. That means it takes a lot less flow to move price. That means that the market's that much more sensitive to any kind of event as well. As you can see, there's not really much conviction from either side after the open in that larger aggressive buy. It's been just pretty tame. Neither side really stepping in to show us any real conviction of yet. Let's see how that takes shape. But so far, at the very least, buyers are trying to take control of this tape and push it off these overnight lows. And seeing a little bit more aggression from buyers here on that delta candle down here. So that is encouraging. Let's take a look at the NASDAQ just to get a sense of how it's doing comparatively speaking. And it's making a nice push here too. We're just going to take this to a 20-minute time slice, pushed above the point of control. And I have something I need to add here. So hold on a second. It's going to look weird for a second. bear with me as I add in a new set of data. This should be the correct one. Oh, yes. All right. We're going to move that over here. Actually, we'll just harmonize it with the rest of the stuff. So this is the NDX options visualizer. This works on NQ. So that is live. Now let's see if some of these others are coming on real quick. We can already see that, the distribution of calls versus puts on NDX. Much more calls so far and at quite a bit higher. 350, 400 points higher here. So call demand is exceeding that of put demand on NDX. So that's constructive to see. I imagine we're seeing something kind of similar here. Okay, now SPX hasn't quite updated yet, so we'll wait for that one to come in. But at the end of the day, seeing some constructive flow starting to come in. I also have a similar setup for triple Q. So let's get that going as well. We'll just pop this back here, turn it into a Cloud Notes column, and then let me pop in my URL for my data. This is all very easy to do too. Like if you want to add on the data sets that I'm creating once I make them public, it's very easy to set this up in Bookmap. All right, so this should be the correct URL. Let me double check it. All right, there it is. We don't need the subchart there. So we could see you got the QQQ options visualizer now live. So we'll be able to see some of this flow as it starts hitting the tape as well. But we can see we're already climbing above key 1 negative. So that's a large area of put positioning on the QQQ options chain. Would be a bit of resistance. We can see that QQQ is starting to make a push above there. So we'll watch for those flows coming in. But overall, markets continuing to push. Pretty impressive move off the lows, too, I have to say. I thought we'd retrace a little more of that candle. We retraced a chunk of that 5-minute candle. As you can see, went right back to the big green line and just kissed it and then continued to move higher. So the next level resistance to watch overhead here is 56.36 on ES. That's going to be a pivot level based on transactional activity that we've seen the market interact with quite a bit pre-market. Let's see how it interacts during the regular trading session. I also have SPY, and I have the same data set for that. So I'm just going to do the same thing there. Turn this into a Cloud Notes column and pop in this data set. Give me one moment. I think I memorized it. Yep, I did. Good stuff. And so we also have the levels for SPY based on the options visualizer as well. And these are just starting to come through. Looks like we just had some pretty big flow hit the tape here. Yeah, this is a bit of seller exhaustion. I'm just switching over to ES because I have everything fine-tuned on that view. This is a little bit of an aggressive sell print. Saw some sweeps coming through. We're retesting that Gamma 2 level now as support. And it's happening a little later than I thought it would happen, but it is happening. We're retracing some of that opening candle. Let's watch here how we react to Gamma 2 as we are starting to push below that big green line, or that EMA 21 on a 5-minute time frame. So far, challenging Gamma 2, looking like we might break below it. And what I would want to see to validate that is it build acceptance for at least one 5-minute candle below that level. I'm going to switch back to Bookmap here. Now, this seller exhaustion print doesn't mean that you're immediately going to get a pop. What it tells you is that sellers threw a lot of ammunition at this. And you can see that in that delta candle. This is the largest volume delta candle so far in the session, right? It's even bigger than that buy delta we saw earlier. So it just gives you a sense that they may slow their roll. Maybe we'll consolidate a bit unless there's another negative event volatility catalyst or a bit of flow that hits the tape. But that was a pretty large sell. That was 1264 involved with that exhaustion print there. So typically you see some stabilizing after an exhaustion print before the market figures out how it wants to move. And we're starting to see some of the flow coming in for SPX, largely constructive. Calls outpacing puts so far. So a bit of feedback, because someone said the reason I was getting a lot of heart emojis is because I'm a great teacher, and that's what all the hearts and hundreds are for. That's very kind of you. Really appreciate that feedback. And D is asking, does Tradeovate data provide full depth of market for Bookmap? I'm going to defer that one to the Bookmap team. If one of you guys can answer that, I am not familiar with Tradeovate. I don't use the platform, so I'm not sure if it provides full market depth for Bookmap. But someone on the team should be able to help you with that one, D. It's a great question. Ships asks, teacher, what would you tell me if I told you that there were times I enter a trade, enter a stop, and then watch Bookmap go right to my stop, stop me out, and then continue in the direction of my original trade? I would say that someone who is predisposed to feeling more paranoid would think, they're watching my levels. I've heard people say that, and I know that's not you, Ships, but I've heard people say that. I'm like, okay, but maybe, just maybe, let's entertain the thought that the stop was too tight. So my way of looking at a market that's trading like this, where the liquidity is low. It's only 26K order book depth, as you can see on screen, adding the offers and the bids. The top right 13K box to the bottom right 13K box, you get a 26K order book depth. I'd say with that kind of order book, you're going to have a market that moves all over the map, especially with any kind of increase in flow, any kind of event, etc. It's just more sensitive. It's more reactive. So what does that tell you? It tells you you've got to size down because you're going to need a wider stop, and you're experiencing the reason with your question. You told me exactly, what I needed to hear to infer that it sounds like you have the right idea for your trade, but you don't have the right stop placement. So if it was me, I would reduce the size of the trade and I would widen the stop. And I would see if that helps to prevent you from being stopped out when you're trading on the right side of the tape. The other thing I would recommend, Ships, is consider the idea of scaling in and scaling out of positions. So you can let the volatility work in your favor a little bit. So instead of going all in a position, assuming you're doing that, maybe go in quarters or thirds. So smaller position size, wider stop, scaling, those were the three things that I would think about for what you're talking about, Ships. Let me know if that's helpful. And D, Bookmap responded saying to check out support at bookmap.com with that question, and the team there should definitely be able to help you out. We are seeing a continuation of the pressure in the S&P 500, now pushing to new cash session lows here. The exhaustion print gave us just a small window of consolidation, but we're continuing lower and with some vigor. We do see increased aggression here and a stop run from some of these buyers. Now, let's look at that session volume profile again. This is where buyers were starting to get pretty aggressive on the tape. And now that we move farther away from that buyer aggression, you're starting to see stop runs. Those same buyers likely getting kicked out of their trades. This is why watching deltas can be helpful. And there's all kinds of different areas of order flow we can apply deltas to. There's, in fact, entire software that's driven just by delta analysis. AD says, I downloaded Bookmap and tried to see how it works. Got super confused with all the levels and different data packages, mostly trade SPX and SPY options. So the first thing, AD, is I would just strip it down to the bare essentials. Just get the core working for what you need. And, if you're trading mostly SPX and SPY, you'll probably want to start off looking at ES and SPY. You can look at ES through Bookmap or Rhythmic Data. You can look at SPY through DX Feed. But you may want to layer in some things here and there depending on how you're trading. If you're looking for opportunities to identify reversals, you might want the MBO stops and icebergs package from Rhythmic or Bookmap Data. If you're looking for opportunities to capitalize on, for example, where the options flow is going, you might want to check out my SPX options visualizer. It's an add-on you can plug right into Bookmap. I'll have it available for SPY probably early next week as well. And I would also check out the wealth of resources on the Bookmap YouTube channel. There's really, really solid videos that talk about how to use the software and really get better feedback from it. But, if you want to quickly give me a heads up as to where you were getting caught up, I'm more than happy to try to help and give you some quick feedback and try to push you in the right direction. I would also encourage you to join the Bookmap Discord and check out the regular educational events they have, because there's a lot of great people regularly visiting, hosting sessions, seminars, and so forth to better equip traders to use the product to its full capabilities. But the biggest thing I would say is if you feel overwhelmed, scale it down, turn off anything you don't need, and build from the basics. That's how I did it, and I feel like for any software package, you kind of need to do that. You need to create your foundation and build from it based on what you need. You are getting closer to the end of the trading session here for me for the Back to the Future session. That's going to wrap up at about 10 a.m. Eastern today. So I will be back next week, 9 a.m. Eastern, for Back to the Futures. I'll also be covering AMD earnings tonight, so be sure to tune in for that. If you'd like to learn more about what I'm up to, visit TraderAid.com. We've got a Discord. We've got some really cool trading tools, some of which you can get on the Discord. Others you can also subscribe to, including the SPX Options Visualizer and soon many other options tools. If you'd like to check out Bookmap, you can get up to 20% off. Visit TraderAid.com/bookmap. That's TraderAid.com/bookmap and scroll down to the special offers. And let's take a quick look here. Wow. Not only did we retrace that opening candle completely, but we pushed quite a bit lower. And now we're just trading around the 5610.25 pivot here. So that was quite a reversal. I don't see any headlines that really give us a sense as to what all may have played out there, but I think the volume also tells us a little bit of a story. There's just not a lot of buyers here. This candle happened in a bit of a vacuum. And then when sellers started to step in, as you can see below, it didn't take much pressure to wipe that entire candle away and then some. So this is, again, pardon me, it's an illiquid market. You know, it really doesn't take a lot to move this tape. Right now, 26K book depth on the S&P 500. We do see a relative balance between calls and puts right now. And that just gives you a sense that this could be a more choppy session. And certainly the price action is giving us that sense as well. But that's why the midpoint comes on screen from the SPX Options Visualizer, showing you there's a relative balance between puts and calls. And that provokes more sideways, choppy consolidation type of price action. So my current order book column and session volume profile column. So I have a question coming in from Ships. Teacher, thanks for your help today. One final question before we go. Can you show me how you have your current order book and session volume profile column set up? Sure. So it's pretty much basics. Like it's pretty much the defaults on each one. So for the current order book, I'm just using the default current order book setup. And then for the session volume profile, I'm using this column with the session starting at 6 p.m. So that's when I have it set up, and I'm using the session accumulated volume profile rather than chart range accumulated. And so I just have the session time set up for 6 p.m. when Globex opens. And then I have the point of control visible as well. And that's what the yellow line is that comes through. So, you know, the current order book is pretty much, I think it's pretty much set up as defaults. I don't believe I've done too much to customize it, but I believe the session volume profile, I did customize the session start time and enabled the point of control. And I use the Globex session start time because I want to see what's built up during those extended trading hours. So I have that as a part of the data that I'm looking at for the session as well. So hopefully that is helpful. And I want to thank everyone for tuning in. It's always a lot of fun doing these. I've got one other question. Looks like, okay, Ralph Bud says, first-time viewer, your past sessions on Bookmap YouTube, TraderAid, your YouTube channel? Great question, Ralph. My past sessions are definitely on the Bookmap YouTube, and many of them are on my own YouTube as well. So look for them there. And if you have any questions, anyone that's tuned in, you're always welcome to reach out. You can email mayhem@traderaid.com. Thank you, everyone. Hope you have an awesome rest of your day. Remember to tune back in for AMD earnings after the bell. We'll be covering those. And then we'll be back next Tuesday at 9 a.m. Eastern for the next episode of Back to the Futures. Have a great day.